Cathie Wood is a name that connotes boldness and accomplishment in the world of business and investing. Her recent acquisition of a sizable number of Tesla shares, her third in as many months, is not an anomaly. This is at a time when Tesla's stock has been experiencing notable ups and downs in the wake of a challenging 2022 that alarmed investors due to Elon Musk's antics on Twitter. We will examine why Cathie Wood grabbed this chance and what it means for Tesla's future in this Wall Street Gains video. We'll also look at how Tesla has affected the conventional auto sector and how they managed to stay one step ahead of the competition. So buckle up, press the like button, and let's get going. Renowned investor Cathie Wood took a big risk when she grabbed a sizable chunk of Tesla stock for the third time in a short period of time. Over $11.7 million worth of shares were acquired by her ARK Invest fund from 3 different exchange-traded funds. This occurs at a time when Tesla's stock has been erratic lately, experiencing large ups and downs after a challenging 2022 that alarmed investors with Elon Musk's antics on Twitter. Cathie referred to Musk as Tesla's Renaissance man in an exclusive interview, alluding to the company's competitive advantage. In Wood's future, Tesla's stock price will have risen to a point where ordinary investors can no longer afford it. A Renaissance man is a person who is knowledgeable about a wide range of subjects, including science, philosophy, literature, and the arts. Elon Musk, on the other hand, is well known for his diverse interests and career highlights in a number of areas. For example, prior to founding Tesla, a business that has completely transformed the electronic vehicle market, he co-founded PayPal, a very successful online payment system. He is also the founder of the Boring firm, which is creating subterranean transit systems, and SpaceX, a private space exploration firm. Additionally, Musk has continuously shown that he is a creative thinker who is prepared to take on challenging initiatives. For instance, he has already launched many spacecraft to the Red Planet in an attempt to colonize it. All things considered, his many pursuits and accomplishments position him as a contemporary Renaissance man, and his audacious ideas and aspirations never cease to motivate a great number of people worldwide. For the third time since October, celebrity investor Cathie Wood has taken control of a substantial chunk of Tesla stock after the company's latest decline to its lowest point in more than 2 years. It's important to remember that at the time Cathie Wood made her purchase, Tesla's stock had dropped by over 19% in December and by about 55% year to date. Additionally, ARK has lost over 13% of its value that month and 64% of its value in 2022. Cathie Wood's ARK Invest bought 74,862 shares of the electric vehicle manufacturer across 3 of her exchange-traded funds for an estimated $1.7 million per a daily transaction report sent to her via email. After Zoom and Amazon, Tesla is the third largest stakeholder in its financial products business. In Cathie's opinion, the greatest substitute for conventional automakers' vehicles is Tesla. With its colorful and occasionally erratic entrepreneur, Elon Musk, leading Tesla has altered the century-old car industry in just 16 years. Due to their size and bureaucratic structure, traditional automakers find it difficult to stay competitive in a world where software is everything. They also take longer to adapt to client requests. These businesses have a distinct culture from software companies and depend on consumer financing to fuel sales growth, in contrast to Tesla, which works with agility and creativity. Rather than being a traditional car maker, Tesla's rate of innovation in the high-end vehicle sector is more akin to tech titans like Google and Amazon. Its remarkable market valuation serves as a warning to other automakers that, in order to stay competitive and relevant in the market, they too must create creative business models akin to Tesla's. While acknowledging that other automakers like VW and BMW have made notable advancements recently, Cathie said that Tesla still outperforms them in terms of power and range. Tesla's inventive electric cars and state-of-the-art technology have upended the established auto industry. Compared to other automakers, Tesla has a distinct advantage in the electric vehicle industry. They were among the first manufacturers to offer elegant and useful long-range electric cars, and they kept setting the standard for range and battery technology. Tesla has been heavily investing in autonomous driving technologies, which have the potential to revolutionize the auto industry. Tesla has been more nimble and able to move more quickly because of their focus on these areas, even though other automakers are also investing in electric vehicles and autonomous driving. However, as more automakers like Ford, General Motors, and Volkswagen step up their attempts to create electric vehicles, the market for these vehicles is becoming more competitive. By 2025, Ford plans to have invested more than $22 billion in electric and driverless vehicles. The Mustang Mach-E, the company's first all-electric car, was introduced in 2020. Ford has also declared that it will launch an electric variant of its well-liked Explorer SUV, an electric transit car, and electric F-150 pickup truck. By 2025, GM wants to offer 30 electric cars worldwide, with 2/3 of those being sold in North America. The Chevrolet Bolt, the brand's first all-electric car, was introduced in 2016. Moreover, GM has declared intentions to introduce an electric Cadillac SUV, and electric Hummer pickup truck, and an electric variant of its well-liked Silverado pickup truck. By 2025, Volkswagen wants to sell 1 million electrified cars a year. The ID.3, the company's first all-electric car, was introduced in 2020. Volkswagen has also declared that it will launch an electric ID.4 SUV, an electric microbus, and an electric version of its well-liked Golf hatchback. For many years, Toyota has led the industry in hybrid cars, but it is currently increasing the number of electric vehicles it offers. Toyota has revealed plans to launch 3 electric vehicles: an electric Land Cruiser, an electric Lexus luxury brand, and an electric version of its well-known RAV4 SUV. In 2010, Nissan became one of the first big automakers to introduce the Nissan Leaf, an all-electric automobile. Since then, the business has unveiled a second-generation Leaf with more features and a longer range. Additionally, Nissan has stated that it intends to launch an electric variant of both its premium brand Infiniti and its well-liked Rogue SUV. Woods asserts that unless automakers want to incur losses on their vehicles, they will not be able to match or compete with Tesla's combo. In today's software-centric environment, Tesla has a big advantage over traditional automakers, and this is mainly responsible for its success. These traditional businesses suffer from having a different culture from software firms, being larger than software companies, having bureaucracy, responding slowly to customer needs, and depending too much on consumer finance to fuel sales development. Because of yes, the top automakers acknowledge Tesla as a formidable rival. Autonomous taxis are viewed as a major factor contributing to Tesla's prospective new revenue source and future success. Mark's creator and CEO, Cathie Wood, predicts that autonomous taxis would generate over 50% of the company's projected EBITDA and 60% of its predicted value by 2026. Even though they will generate 57% of the company's revenue in 2026, electric cars will be much less profitable than robo-taxis. Due to K's growing faith in Tesla's self-driving capabilities, they estimate that autonomous ride-hailing will debut in 2026, 4 years after Musk originally predicted. An industry that has existed for more than a century has been upended by Tesla's success. When questioned about Elon Musk's ability to lead at Tesla, Cathie Wood had some reservations about his overuse of Twitter, which has alarmed some investors. It is anticipated by investors that Tesla might start providing autonomous ride-hailing services for a fee as early as 2024. The updated model is expected to increase Tesla's capital efficiency even more, with each extra unit of capacity costing between $6,000 and $8,000 by 2025. Compared to the prediction from the previous year when the company spent about $80,000 to upgrade the Model 3, this is a huge improvement. Based on ARK's bear and bull case scenarios, it is anticipated that Tesla will pay between $2,000 and $7,500 for each additional capacity unit in 2026. In 2026, the value of Tesla's shares might range from $2,900 to $5,800, considering the company's recent model updates. But if this happens, Tesla stock will become unaffordable for the typical American, as only wealthy investors will be able to purchase it. According to Elon Musk, owners of Tesla cars will be able to include their cars in the ride-sharing network, and the business would charge a commission for each journey. He anticipates the service to launch as early as 2021, though it's unclear if the business will be able to fulfill this aggressive schedule. Some, on the other hand, are more negative and fear that the business won't live up to its potential and will just end up being another production company. The average 12-month price objective for Tesla on NASDAQ is $302.5, which is about double the company's present worth. Tesla's stock price projections indicate a wide range. The most optimistic analyst covering Tesla believes that the stock will reach $760 in the upcoming year, while the most pessimistic expert believes that it will fall to $73. The opinions of investors on Tesla's short-term prospects differ significantly. For example, Cathie Wood thinks that the recent drop in Tesla stock is a great time to make an investment. She thinks Tesla has a big advantage over other automakers and has a strong outlook on the company. For the third time since October, Woods. ARK Invest has amassed a sizable stake in Tesla stock, demonstrating her unwavering faith in the company's future, despite worries expressed by other investors regarding Musk's diversion on Twitter. This brings an end to the video, so please remember to subscribe and give it a huge thumbs up. We appreciate your time, and we'll see you in the upcoming video.